Hey guys, and welcome back to Heinz and Clark podcast. If this is your first time here, I'm Aaron and this is Steve. We own Heinz and Clark Ltd, a CPA firm in the Twin Cities. Our podcast is to help make tax, investment, finance, and current market topics easier to understand and hopefully more fun. The topic of today's podcast is real estate. The goal of this video is to provide current tax and investment updates on real estate. So the next time you're investing in real estate or thinking about investing in real estate, you just have a better understanding of, these topics and as you evaluate that decision.
I'm going to just give a quick rundown on kind of what our firm does. We provide tax planning and tax preparation for both individuals and small business. A wide variety of small business clients. We're small business owners ourselves, so we can relate. Consulting, cost segregation relates to some of this real estate stuff. We're not going to get into detail on this podcast, but we will in a future one. A variety of accounting and bookkeeping for small businesses, sales tax. And then we also kind of a couple of niche markets. We expat tax preparation kind of for international people. And then kind of for this topic, real estate. We have a number of real estate investors as clients, and so we've been working a lot. It seems lately this has been a hot topic, a lot on the planning side and not just the tax preparation. So that gets us into our topic for the day. As Aaron said, we're going to talk kind of a high level on real estate. We're not going to get any detail on most of these areas, but we will be looking at doing that in future episodes. So if there's a specific area of real estate you want to know more about from a tax or finance perspective, let us know. A couple things we're going to cover. Aaron's going to talk about why invest in real estate. He'll talk about things like cash flow, some tax benefits, deductions, appreciation in the market, a way to diversify your portfolio, and also an inflation hedge. Inflation's been a hot topic lately, so Aaron's going to talk about that as well too. We're going to talk about different types of real estate investments. So a lot of people are probably more familiar or think of residential type of properties, single family home, apartment buildings, condos. There's also commercial flips, which was pretty popular, maybe 5 to 10 years ago. Vacation rentals, which is becoming much more popular now. Airbnb being a big driver in that. And then also a couple of lesser known ones, syndications and REITs, or real estate investment trusts. So that'll turn over to Aaron.
Yeah. So why invest in real estate? There's a number of different reasons to do it. Kind of what we'll go through today is an investment perspective, tax perspective, and inflation, which Steve mentioned, kind of the hot topic of there, with it being 6.2% reported in October. But from the investment perspective, cash flow. That's kind of the number one thing. The rental property can provide monthly income stream that is somewhat passive. You can kind of choose how active you want to be involved, whether you use a management company, whether you're the management company, but it does provide a monthly stream of income with relatively less day-to-day operations. Another income stream for people that have other jobs or careers or own businesses. The other piece, which I think a lot of people are aware of, is appreciation. And one thing that happens in real estate is it just kind of always goes up. That's a product of inflation. But naturally there are ups and downs in the market. We see the waves, but if you look at real estate over time and you just draw a line on that graph, it goes up. And so one of the big advantages in real estate is the actual investment makes money over time for you. We'll talk about that in kind of the tax perspective now. One of the cool tools and reasons we've been using real estate as a planning tool for our clients is it in the first year that you invest in a real estate property, whether it's commercial, residential, rental, you have the ability to deduct a large amount of depreciation in the first year to reduce income, so that you can taxes. The reason it's a really cool strategy is a lot of times people come in at the end of the tax season, should I buy a vehicle? Should I buy equipment? Should I do all these things? And I'm stuck here thinking, do you need them? Like, what, are you just buying stuff to get a deduction, and then you're buying things that depreciate over time? Real estate, you can get the same deduction right up front, sometimes even better because it's a bigger investment. It produces cash flow, but it also appreciates over time. So rather than buying a truck for 100K or 50, 60K, and 5 years down the road it being worth fractions of what you paid for it, real estate 5 years down the road is going to be worth more money. And so you're investing while also getting the advantage of a tax deduction.
Yeah, and I think Aaron mentioned being able to take a large deduction. I'll just give an example. So residential real estate is typically depreciated over 27 and a half years. However, you can segregate out the costs related to make it simple, we'll just say the non-structural components. So things like appliances. And those things can be depreciated over 5, 7, or 15 years. And under current tax law, thanks to the Tax Cuts and Jobs Act, anything that falls in those 5, 7, and 15-year categories can actually be taken as bonus depreciation in the first year, providing you with a pretty significant loss in the first year. Sometimes we see, we do these cost segregation studies where we essentially inventory out those products, and we see it going anywhere from 20 to 40% deduction in the first year. So if you buy, $200,000 home, you might be able to take a $40,000 to $50,000 loss in the first year on it, which is a pretty significant benefit. So why we love real estate from a investment standpoint, especially from a tax perspective, as Aaron said, you get cash flow, right? So that's ideally you're not going to buy a property if it doesn't cash flow on a monthly basis or annual basis, but then you also get the tax benefits on it as well too. So there's one caveat I think that I won't go into detail on with taking that loss. In tax law, there's passive activity rules, which we could do a whole separate episode on. But essentially, for a real estate investor, you would need to have 750 hours in real estate activities. There's a variety of things that we can help to mitigate some of that or make it easier. That 750 hours can also be combined by a husband and wife. And also things like short-term rentals don't qualify or that isn't a requirement. So there's ways that you can structure investments, even if you don't hit that 750 hours, to maybe still make this a legal deduction for you.
Yeah. So in the third topic, why invest in real estate? Inflation, and the inflation piece kind of ties in with appreciation, but there's some advantages to when you have periods where there's high inflation. One of them being the effect on debt. And so when you get high periods of inflation, the value of your holding is naturally going up, but your debt is typically at a fixed rate, and so the value of your property is going up quicker than a fixed mortgage because that's not going up. And so you're generating equity instantly in your properties just by inflation being high. The second area where inflation can be an advantage is increased rents. When the market goes up and house prices go up, rent tends to follow in line. So the better the housing market, the higher rents are. Higher inflation, higher rents are. And the advantage there being able to increase your monthly revenue while your fixed mortgage rate payment stays the same, just provides more cash flow to you as an owner. One of the areas that this is even more effective is in residential rentals, typically, and short-term rentals. Residential rentals, you're usually renewing every year, so you get the opportunity to do those increases along with inflation more regularly rather than commercial leases, which are usually longer term. And the third one falls right back in with the appreciation that we talked about before. The property values just just tend to go up. The higher the inflation, the quicker they are going to go up. But one kind of example as I was looking at this it was just kind of watching the ebbs and flows of the market. We all remember the crash that happened in 2008, 2009. If you don't remember, you might be too young to be watching this video. There's probably something much cooler out there for you to watch. But in 2008, 2009, market goes down significantly. There's a big drop, but by 2015, the price of property had soared back above the highs of 2006, 2007, and we're already beating. So as we talk about appreciation in real estate, it does flow, but it always goes up.
Yeah, so I'll jump into some types of real estate investments. I kind of listed these out before, but maybe just a little bit more information on them. Residential property, so your typical single family home or condo or apartment building. There's people still are flipping properties where maybe they'll buy a property that needs a rehab, maybe a small rehab, maybe a large rehab. They'll either do that rehab themselves or they'll hire a contractor and then try to resell it for a profit. You could also rehab that property and then rent it long term as well too. Vacation rentals, as I kind of mentioned, that's become very popular recently in vacation spots, Florida, Arizona, South Carolina, even like cabin type of homes, lake homes. I know a lot of people on Lake Minnetonka have been renting their homes. You can also get into kind of timeshare where maybe you buy quarter share of a property, a quarter share of a cabin type of situation, quarter share of a condo type of situation. Commercial, industrial, things like office buildings. Something to think about if you're a business owner and you're going to have office space, and if you're going to be in your business for a number of years, might be a good idea to look at purchasing a place and essentially paying the rent to yourself versus paying that rent to someone else. Touch briefly on syndications. A syndication is essentially more of a passive investment where you're investing into kind of a small group or a fund, if you will, that's managed by a property manager who typically is pretty well versed in A, finding properties, and B, managing them. So you're kind of relying on their expertise in finding the property and managing it to provide a return for you. Obviously a lot of benefits there. Some downfalls is that you don't get the control on it, right? You don't get to control maybe when the property's sold or what types of updates you're doing to it. But then you also usually have a pretty much, I shouldn't say guaranteed return, but it's pretty, safe, if you will. And then they usually try to either sell it or refinance and get some cash out to pay the initial investment back as well too. So you still get the benefit of the cash on cash return, as well as the appreciation that Aaron kind of touched on before too. So the last one I'll touch on is REITs. A REIT is a real estate investment trust. I think to simplify it, it's essentially like a stock that you buy in a fund. So you're not actually owning the real estate. You're just essentially buying stock of a fund that invests in real estate. So you can get the returns that Aaron was talking about, but you don't own the property. So you don't necessarily get the appreciation in value like Aaron was talking about. So a little bit of a different investment there, but another way to get into real estate. So I think to maybe provide one last comment just on the real estate investment, that there's also a lot of long-term benefits to it as well. Aaron kind of talked about the kind of ups and downs in the market, but most people who invest in real estate are investing in the long term, so they're not too concerned about kind of the ups and downs in the near term. But then also there's a lot of ways to essentially give or sell or trade property in the future that can have significant tax benefits, or essentially make that transaction tax free. So again, some topics we'll probably get into in future episodes. So
yeah, and kind of to that point is, as you hear things that we're talking about, this is our second video. We haven't gone into too much depth on anything, and we will continue moving more towards those. But if you have questions in regards to any more specifics on any of these, feel free to reach out and let us know, because we will do follow-up videos on Q&A. Make sure you go like our socials, is the
That's what
That's what
we were paid to say that. Yeah.
That's what the kids are saying. I don't know if we got paid a ton, but enough. Enough to say it. And then I think we did find out that in our first video I said the website will be here. I don't know if that got cut out because apparently we can't do that. We need a bunch of viewers. So make sure we can get a bunch of viewers.
Tell your friends.
So I can do something like this.
Tell your friends.
And our website can be there. So, yeah.
All right. With that, I think we're going to wrap it up.
All right. Thanks a lot.
Thanks.